Hello everyone, welcome back to Financialistic. Today we are discussing about mutual funds. If you are looking to grow your money without needing to watch the market daily or take on too much risk, then keep watching. In this video, I will explain what mutual funds are, why they are one of the smartest ways to invest in Nigeria, the different types of funds, the pros and the cons, and most importantly, how to get started right now. So let's start with the basics. What exactly are mutual funds? In simple terms, mutual fund is a collective investment scheme where money from multiple investors is pooled together. This pool of money is then managed by a professional fund manager who invests it in different financial assets like stocks, bonds, treasury bills, or a combination of this. So instead of you trying to pick and manage individual investments, the fund manager does this on your behalf. Imagine you and 99 other people contribute 10,000 naira each. Together, that's 1 million naira. The fund manager then takes that 1 million naira and invests in different financial assets like stocks of top companies, government bonds, and treasury bills. When these investments perform well, the entire fund grows and so does your share. When you invest in a mutual fund, you buy units of shares in that fund, which presents a portion of the total assets held by the fund. The value of each unit rises or falls depending on how well the fund's investments perform. If the assets increase in value, so does your investment, and you can earn returns over time. Let's say you buy 100 units in a mutual fund at 100 naira each. If the fund grows over time and each unit is now worth 150 naira, then your 100 units are now worth 15,000 naira, an increase of 50%. Let's go through key reasons why mutual funds are especially smart choice for Nigerians right now, given the economic landscape. Number one, inflation protection. Inflation in Nigeria has been high, and keeping your money in a regular savings account means you're losing value over time. With mutual funds, especially equity or balanced funds, your money has the potential to grow at a rate that outpaces inflation. Three, accessibility and affordability. Mutual funds are accessible to nearly everyone. You can start with as little as 5,000 naira to 10,000 naira, making them affordable for all income levels. Three, professional management. Even if you are new to investing, you have an expert managing your money in a mutual fund. Professional fund managers have access to market data, trends, and tools that most people don't. They help you get the benefits of the stock and bond markets without the stress. Four, passive income potential. Some mutual funds like bond or money market funds offer regular dividends. This means you could earn passive income without having to monitor your investments daily. For instance, if you invest in a money market fund, you can receive quarterly interest payments, which can be a helpful source of income to supplement your regular earnings. One thing that makes mutual funds versatile is that they have various types suited to different goals and risk appetites. Let's break them down. Money market funds. Money market funds invest in short-term, low-risk securities like treasury bills, certificates of deposits, and commercial papers. These are ideal if you are looking for stability and a safer investment option, but they also tend to have lower returns. If you are saving for an expense within a year or two, like buying a car or covering a major life event, a money market fund could be the right choice for you. Equity funds. Equity funds or stock funds focus on shares of companies listed on the stock exchange. They offer higher returns but come with more risk as stock prices fluctuate. For example, an equity fund might have invested in MTN, Dangote, or Nigerian breweries. If these stocks perform well, your returns could be substantial. Bond funds. Bond funds invest in government or corporate bonds, providing steady and reliable returns. These are suitable for those seeking income stability with moderate risk. Balanced funds. Balanced funds mix different asset classes, giving you both growth potential and stability. This makes them a popular choice for medium to long-term goals like saving for a home or future education. Sector-specific funds. There are also sector-specific funds that invest in particular industries like technology or energy. This allows you to capitalize on specific market opportunities. Now, let's discuss some of the top benefits that make mutual funds a solid choice. Number one, diversification. One major benefit of mutual funds is diversification. Instead of putting all your money in one stock or bond, mutual funds spread your investments across various assets. This minimizes risk because if one asset underperforms, Others in the portfolio will balance out. For instance, if a mutual fund invests in both stocks and bonds and the stock market dips, your bonds may still provide stability, minimizing overall loss. Number two, liquidity. Mutual funds are relatively liquid. If you need to access your money, you can redeem your units within a few business days, unlike some investments like real estate, which can take months to liquidate. Number three, compounding. Mutual funds also offer the power of compounding. By reinvesting your earnings, you increase your capital base, allowing your investments to grow faster over time. Imagine you earn a 10% return on 100,000 naira in your first year, growing it to 110,000 naira. In year two, if you earn another 10,000 naira, that's 110,000 naira on your new balance, not just your initial amount. Over time, these returns compound to grow your wealth significantly. Ready to start investing? Here is a step-by-step guide to get you started with mutual funds in Nigeria. Step 1. Define your investment goals. First, ask yourself, what do I want to achieve with this investment? Whether it's building wealth, saving for retirement, or generating income. Having a clear goal will guide your choice of mutual fund. Step 2. Research available mutual funds. In Nigeria, popular mutual funds include those by Stanbic IBTC, ARM, FBN Quest, and United Capital. Each provider offers a range of funds with varying returns and risk profiles. Look at past performance, minimum investment requirements, and fees before choosing. Step 3. Open an investment account. Once you've chosen a mutual fund, you need to open an account. Most providers have user-friendly websites where you can open an account online or visit their branch. Step 4. Make your initial deposit. With your account open, you are ready to make your first deposit. Start with an amount you are comfortable with, and remember, you can always add more over time. Step 5. Monitor and adjust. Finally, monitor your investments periodically. You don't have to check daily, but reviewing it every quarter can help you decide if it's performing well or if you need to readjust your strategy. It's important to understand that while mutual funds are generally safe, there are still risks involved. Mutual funds are affected by market conditions. If the market drops, the value of the fund may also decrease. For bond funds, interest rate changes can affect returns. When interest rates rise, bond prices usually fall, affecting the value of your investments. Mutual funds rely on fund managers to make smart investment decisions. If they make poor choices, your fund may underperform. A major perk for Nigerians investing in mutual funds is that mutual fund dividends are often tax exempt, making them a great way to maximize returns. Frequently asked questions: can you lose money in a mutual fund? Yes, it's possible to lose money in mutual funds, especially in equity funds, as they are affected by market fluctuations. However, diversified portfolios and professional management can help minimize the risk. How long should you keep money in a mutual fund? Mutual funds work best as a long-term investment. Generally, you should aim to keep your investment for at least 3 to 5 years or even longer if you want to maximize the growth and ride out market fluctuations. Do you need to be rich to invest in mutual funds? Not at all. Many Nigerian mutual funds have low minimum investment requirements, sometimes as low as 5,000 naira to 10,000 naira, which makes them accessible to nearly everyone. How do you know which mutual fund is right for you? Start by assessing your financial goals and risk tolerance. If you are looking for low risk and steady returns, a money market or bond fund could be a good fit. If you are open to higher risk for potentially greater rewards, an equity fund might be suitable for you. Remember, research and if possible, seek advice from a financial professional. Now is the perfect time for Nigerians to start investing in mutual funds. With inflation rates rising, the purchasing power of cash savings decreases year after year. By investing in mutual funds, your money can work for you, potentially generating returns that not only keep up with inflation but also grow your wealth over time. Mutual funds provide an opportunity to benefit from a diversified portfolio managed by experts. They are accessible, low cost, and flexible, making them ideal for beginners and experienced investors alike. Thank you so much for watching. I hope this video has given you valuable insights into mutual funds and why they are a fantastic investment option. If you found this helpful, don't forget to give it a thumbs up, share it with your friends, and subscribe for more videos on smart financial habits and investments. And as always, if you have any questions or topics you would like us to discuss in the future videos, drop them in the comments below. I'm here to help you on your journey to financial success. Until next time, happy investing.